Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys we will take a look at the Great British Pound because as you know on the coming week we will get the Bank of England meeting and we just can't ignore this event and we'll have to make the suggestion, make an analysis what we could expect in the coming week. In general, the trading of the Great British Pound the last few months very sweet topic to us because as practice shows that investors mostly undervalue the weakness of the Great British Pound, fundamental weakness of the United Kingdom economy and the long-term perspective. And we already have seen some times when we have traded last year the Bank of England decision when the rate has not been raised. Some votings already have been traded. It's Brexit voting, the voting last time when we traded the voting in the parliament, so elections in the parliament. So this creates very attractive background for the trading in the long term on the Great British Pound. But in the short-term perspective, situation could be very sophisticated and tricky, but at the same time, this currently is very thrilling moment in the Great British Pound. So actually, as you can see on the daily chart, market is coming to an area that is becoming some kind of the churning. So usually traders call the churning the area where market meets significant resistance and it stands, and from the opposite side it is pressed by the bullish power that exists in the market. So it is coming to very tight range where price action shows very great trading volumes, and it's called as a churning. Usually when the market abandons churning area, it leads to significant breakout, either to the upside very strong rally or to the downside very strong plunge. So, and we're coming to a very important moment on the Great British Pound in the short-term perspective, because on the 3rd of August, on Thursday, we will get the rate decision. And currently, guys, there were a lot of hints that Bank of England could raise rate in August. It's more probable time when the rate could be raised. At the same time, investors think that this will be just tactical rate increasing. So it will be maybe in August and in September. There's 2 times to resolve some fiscal problems and stance in the economy. But in general, Great Britain is not ready yet for the full cycle of the rate increases, the Fed. So it will be just tactical rate increase. And that's why a lot of rumors around this event, so whether this will happen or not, and it's really some driving factor for the currency market right now. As we think that this rate really could be raised in August, this creates some really tricky moment for trading, because if it will really will happen, this Great British Pound will skyrocket up. And definitely it will hit our next 132.50 target, or maybe it will continue action further, because on the longer time frame we have the 135.20 area is the next target as well. That's why what we could do in the current circumstances. Here market is coming to a very strong resistance, as we said. It's 30 pips higher. Also it has some intraday targets that we will see a bit later on the intraday charts. And in the beginning of the week, we suspect that bears will have more chances to succeed, because as soon as these targets will be completed, market will have the 4 days till the Bank of England meeting, and market could turn to some normal retracement. We suspect that retracement could reach 130.40 area, or maybe even lower. So 3.8 retracement could happen here from this most recent leg. But after that, we should treat this level, whatever it will be, as the potential for taking the long position, because overall picture, guys, here on the weekly chart mostly looks bullish rather than bearish. Of course, we could be wrong, and if you do not want to trade the Bank of England meeting, if you do not trade such events, it's better to just sit on your hands. do nothing, just watch what will happen. But if you would like to trade this event and come through it, after retracement will happen, we should think about possibly taking the long position. Of course, we should just sit on the hands till the Bank of England and the last moment when we have to make the decision. So wait as long as we could, because we could get the new inputs for trading and make the reasonable decision on what really will happen. Maybe market will show some signs that will let us to suggest what really will happen. But in 2 words, the chance on the rate increase is really significant in August, and this leads us to conclusion that in the first part of the week, the bears will have more favorable situation as retracement could happen. But after that, we should be extra careful because it's really situation could be changed from top to bottom as a result of the Bank of England meeting. So on the 4-hour time frame chart, I will show you the picture that really makes the overall situation even more sophisticated. Because take a look, right at the same area, that's actually the resistance that I'm talking about. We have the bearish divergence here as well. So take a look, this large butterfly is completion point, around 131.66. We have the 3 drive sell pattern is completion point around 131.50. So inner butterfly also exists here as the part of the free drive. Also, as I said, we have here a fib level and we have monthly pivot resistance one. So it's considered a really significant bearish cluster. So if you have bearish view on the Great British Pound, or you intend to make the intraday bearish trades, keep an eye on this level, because here it could become the not bad chance to go short with the minor target. As I said, do not focus on the too extended target. So you could keep position until the Bank of England meeting, I suppose. So probably retracement could pass maybe 100 pips, maybe a bit lower. So some kind of the 3-8 retracement maybe will happen of this most recent leg. But as soon as market will come closer to the Bank of England meeting on a Thursday, it's better to close the all bearish positions. Because as I said, this will be a real reversal point on the Thursday. So that's our strategy for coming week. Let's see how situation will change within the week, and especially closer to the Thursday, to the 3rd of August. So